Welcome to App Talk with Upptic, where we dig into the nitty-gritty of how to grow apps and games. We speak with industry experts about specific strategies, tools, and tactics they use to find success, and we keep you up to date with emerging news and trends in the ever-changing games, marketing, and technology ecosystem. My name is Xander Agosta, Director of Marketing here at Upptic, and joining me today is
Warren Woodward, co-founder of Upptic, with a new microphone.
With a new microphone. Great. Thanks for having us, Warren.
It's my pleasure, Xander. It's just me and you today, man.
Yep. Should be good.
I like these episodes. We get to go a little nitty gritty, more into the news and what's going on. It's a little less formal, but looking forward to it. There's a lot going on this week.
There is, and we have some interesting, exciting news at the top. So if you want to start with that.
Yeah, I mean, we just wanted to do one final big shout out. We are doing our second ever Upptic webinar next week. This is free. We will link to it. And the topic this time is how to grow Web3 games. And this is an area where there's really not a lot of content. There's so little content in it that if you like Google Web3 growth, you basically get like Upptic and not a lot of other, not a lot of other stuff. But we got some really awesome people on this webinar. We're super excited about it. So we have Jiho, aka Jeff Zerlin. He is the co-founder and head of growth essentially at Axie. And then we have Yusuf. His last name is very hard to say. Yusuf Gulam Babas.
Like that.
Yeah, it's Yusuf. He's the CTO of Animoca Brands, obviously like one of the true titans of Web3 gaming. The owner of Sandbox, large investor in Axie, and basically skin in the game of every, almost anyone who's anybody in Web3 gaming. And then we have Megan McWilliams, who's the COO of Arrivant, one of our favorite up and coming Web3 developers. And why have we picked these companies? Why are we covering this? So like we said, there's not a lot of good content on this. Upptic prides ourselves in sort of like learning in real time. We are on our journey, learning, making case studies about what works for Web3 games growth. It's also undefined. And all three of these companies have had really unique early breakthroughs and growth hacks of how they've been able to kind of dominate their respective segments. And with Axie, it's, we're going to dig into some of how basically with no paid marketing whatsoever, they got completely viral community-driven adoption. And what that means is they go into the next phase of growth for mainstream. I think for Animoca, it's going to be more about how they've built this portfolio strategy, identified games that have a lot of potential upside, and kind of managed all these disparate streams. And then with Megan and Arrivant, I really want to dig into their really innovative player onboarding system that they built. That because a big problem with Web3 gaming is just teaching people how these games work. There's often a lot more moving pieces, sometimes more hoops you have to jump through. So it's not enough to just get people's attention. You have to kind of take them on the journey with you. So three of our favorite people in the space, all, kind of like epic people in their own right. And we get to have a nice casual conversation, and it's free. So come hang out. Should be really high value. And if you can't, you can either find the link or go to upptic.com/webinars and you'll see it right there.
Yeah, I'm really excited just because we did the dry run last week, and just the diversity of opinions and perspectives, as well as just the diversity of products, is going to be really interesting, contrasting perspectives. So I think there's a lot to learn for anyone who is anything around Web3 games. Cool.
Absolutely.
Our first main segment is Industry Insights, where we do a deep dive in industry news. Fair amount of news to cover this week. Warren, do you want to get started?
Yeah, we're going to be doing some updates on a few stories that we've been watching closely. First, we want to talk a little bit more about Vessel, the new Web3/mobile product from AppLovin. They officially put out their press release. We tracked when Vessel was unveiled in the App Store, and we talked about it some then. We had some theories. Now we kind of have the official word from AppLovin, the Vessel team. And we're really excited too, because we've got Raf, who is the kind of like head of new initiatives at AppLovin, and one of the leaders on this initiative. We got him to agree to come on the podcast in the next couple of weeks and to really do a deep dive in this. So, I mean, why are we talking about this so much? It's really captured our attention because it's right at the nexus of three intersections that Upptic really focuses on, which is Web3, mobile apps, and performance marketing. And this is the probably the one product I've seen most at the nexus of these three things, with the bonus of kind of pushing the limits of app and Play Store policy for products like this. So yeah, Anyway, we wanted to just share some actual straight from the horse's mouth. What is AppLovin saying about this product? So we'll go a little deeper than normal. A few pull quotes from the press release. Headline of the press release is AppLovin launches first NFT marketplace for app developers to monetize mobile gaming. All right, so from their press release, AppLovin, the leading growth platform for developers, today announced its first NFT marketplace to launch in the app stores through its subsidiary Open Vessel Technologies, LLC. Vessel, which is currently live in Apple and Google Play app stores, enables mobile game developers to easily integrate NFTs into games to drive engagement and revenue. And then this is a quote from Raphael. Vessel represents the next evolution in mobile game monetization, giving developers a new opportunity to monetize apps and drive meaningful engagement and growth, said Raphael Vivas, AppLovin's general manager of new initiatives. The marketplace is live, and our engagement data shows that consumers are more than ready to take part in new ways to play and earn. By combining the consumer demand of NFT creation and purchasing with high engagement levels associated with gaming, Vessel is showing strong potential as a new monetization stream for mobile apps. And then one more pull quote. An all-in-one marketplace and wallet, Vessel makes it easy for consumers to gain access to customized NFTs. Developers can allow users to securely buy, sell, and trade their NFTs and convert their earnings into cash. And then I bolded this because I think it's very important. Vessel has cleared both Apple and Google Play Store reviews, meaning both app stores' stringent guidelines. So AppLovin is really highlighting the kind of like official buy-in from Apple and Google in their press release. And I think that's something that we'll really be keen to dig into with Raphael when he comes on the show to just talk about how, how that happened, the pivots they had to make along the way, and maybe how this will evolve in the future. So yeah, Xander, now that we have more official information about this, what do you think are the implications of, Vessel being officially live and approved by Apple and Google and kind of being talked about out in the open and beginning to market it now to the game world?
Yeah, I mean, I think it marks really an evolution of the platform's understanding of what NFTs are, and basically the starting line for the future race for the NFT gaming marketplace on the official platforms. There's sort of you think about these from two different perspectives. Apple and Google got what they want at the end of the day, which is they get their 30% tax on the way in, and that's really important. And Apple had basically looked at the ecosystem the way it is now, and their business is wholly reliant on these platforms, and they understand that, and they want to be these platforms' best friends, and so they've adopted the policies to basically say, hey, we'll do whatever it takes to get this through. I think from AppLovin's perspective, this is just another notch on the thesis I've had from AppLovin forever, which is they're the most robust platform for mobile game marketing technology that exists anywhere. They're continuing to add more and more advanced technologies that cover more and more components of the mobile games marketing lifecycle, and they'll be able to leverage their go-to-market muscle across the different segments to continue to expand over time. So, my thesis on AppLovin continues to get stronger and stronger every time they make a press release. I mean, they're like the most impressive operators in mobile games marketing space outside of the platforms. And I think net, it's good. It shows that we're as a Web3 games ecosystem evolving and moving forward. For AppLovin shareholders, it's great. For developers who want an easy onboarding to this to the Web3 ecosystem, I think it's gonna be really powerful. What's gonna happen also is AppLovin is going to find a way to this is where I get into trouble, because AppLovin, I think they're very good at maximizing their monetization, and so they're going to find ways to maximize their monetization. And so
right, and we've been we've both, I think, praised certain actions from AppLovin, but also both in the podcast and in real life been very critical of certain actions that AppLovin's taken in the past too. So with that level of aggressive growth and expansion into different segments, they have, I'll just say, they've been like a bit ruthless at different times. But I'm excited to see them also just sort of like openly engaging with the community about this product, and agreeing to come in and talk to us too. So yeah, I agree with everything you said, Xander. I don't know any other thoughts you want to share on it?
Well, I'm stoked to get Raphael on. We've been trying to get AppLovin on the podcast since we started, so it's good to finally have it happen. Interesting times. I think we're going to see a lot more products like this coming forward, either now being pushed to the forefront of visibility because they already exist in the App Store, or people saying, oh, here's the way that we get it done. Let's copy their model and get it pushed through. So expect this to be the beginning, not the end.
Yeah, I think one thing to kind of unpack is going into this era. So there's like this new emerging product category of adding ownable assets of one way or another to your game economy.
Right.
And this is part of the play with Vessel. Friends of the show, Stardust, I think this is a big part of what they're building as well.
Yep.
Xander, I think you're going to cover another product in your app of the week that's also kind of exploring some of these segments. And I think this is sort of an emerging product category, which is like the plug and play solution to make your game, Web3. I wouldn't even say make it a Web3 game, but like add Web3 elements to your game to make it a more robust economy and give you more levers for monetization.
Well, and it's interesting because if we really think about what that is, you're really just giving players a way to realize their own realized value out of time they put into the game or the skill they put into the game. And now I think this is getting pushed and generally accepted in a way it wasn't before the Web3, call it revolution, I guess. It's like we're early days of that revolution. But if you think about it another way, this has already kind of existed because this is now just skills with a blockchain, right? Because previously you had these games where you could go, you could compete, you could win, and you could pull value out of the ecosystem, and skills was sort of the arbitration layer there. I think what's happening with the Web3 technology component is like it's just going to be proliferated in a really, really meaningful way. And I think what it really is doing long term is just blurring the lines of what a digital economy is with a physical economy to a point where they're basically indistinguishable. And that's something that we'll continue to see going forward.
Yeah, so why don't we go from new products emerging to products dying with this next one.
Nice. All right. I like how we comment on our transitions every single time. At least I do. Google is good. They're so good. So I know you're going to cry for this one, Warren. Google is shutting down Stadia in January 2023 from The Verge.
I forgot Stadia still existed.
Yeah. Google is shutting down Stadia, its cloud gaming service. Google will be refunding all Stadia hardware purchased through the Google Store, as well as all games and add-on content purchased from Stadia Store. Google sees an opportunity to apply Stadia's technology to other parts of Google, like YouTube, Google Play, its AR efforts, and the company also plans to, quote, make it available to our industry partners, which aligns with where we see the future of gaming heading. Okay, so it seems like that last component, what that really meant to, what I understood by that is like they're moving it to a licensing model, is my guess, which basically means that if you're someone like Samsung or one of these companies, you can license the underlying tech from them and they'll charge you some sort of B2B revenue stream. That's basically what I understand that last component to mean. And it sounds like they're also folding the engineers into other sections of Google. And what they said, if you read the article, was basically their CTO or whoever was head, it's like the technology here is really good. We just didn't find a product market fit. That's basically what they said. And that's like a very Google problem to have, right? It's similar to like the Google cloud and other things that they've had, where they have had really robust infrastructure and they've had a harder time with the B2B go-to-market motion. So I mean, this isn't thoroughly surprising. I sort of want to take a step back and think about what are subscription, how important are subscriptions in the context of where we are in the game adoption life cycle or ecosystem over time. What I mean by this is like Microsoft is still really focused on the gaming bundle. Sony is, Apple is, Netflix is sort of revolution, or they're all moving into that segment where they're saying, hey, like we think game subscriptions are the way that games are going to be monetized in the future. They're all pouring tons of money into this. And so it's funny to see one of the major players pull back. And I kind of wanted to talk about what we think is happening there. So, I mean, and at a high level, I see two competing forces. Game subscriptions are a depressive force on the value of game like entertainment, right? Because you're basically taking as many games as you can and giving them a static price. So it's like $15 a month. And you're saying basically what that's doing is decreasing the value of every incremental game in the ecosystem. So it's hard to sell Call of Duty or Fallout for $60 if you can get Call of Duty or Fallout for $15 a month, along with a bunch of other stuff. So it's suppressing the value of the game asset class. But what's happening at the same time is player ownership and Web3 technology. And what that is doing is saying, hey, we're going to actually tangibilize these digital assets in a way they weren't before and give more player ownership. And that's causing players to be willing to spend significantly more. And so I guess my question to you is, these forces are pulling in opposite directions. Do you have any predictions on where we're going to land on this? Any thoughts here? It's kind of a
Yeah,
complicated, nuanced question.
It's such a volatile time in gaming economic models right now. I mean, we're gonna touch later on, you know, the latest update and the declines of free to play. I think it's never been more clear, never been more confusing. If you're starting to build a game today and you're just like, I'm building a game, what is the economic model that you build around?
Right.
Like there, you know, 4 years ago, it was like, well, clearly you do a free to play model, like that gets you maximum exposure and maximum potential upside. You know, previously there was, you know, premium or nothing. I don't know. I think I would push back a little bit on your first point, Xander, which it really depends on the incentive structure on the back end of these subscription services. If the incentive structure can be structured properly, you reward engagement, right? And so if you spend 5 years developing a AAA game and that eats up, you know, half of the play time of someone on the platform, that you're getting disproportional upside from that as a developer. I am not deep enough into this to know how that's reflected in gaming models, but I think something like that will need to evolve in order to incentivize quality over quantity, because I think it is still clear that even with, I mean, I love Xbox Game Pass, but most of my time has probably been concentrated with a couple of games. And I would assume, you know, it's fun to like load something up and play for 5 minutes, but ultimately your game time is not going to be distributed equally, and nor should the revenue be. So I think there's a lot of upside in subscription services. It's just making sure that we incentivize good development habits with those business models.
Well, so let's do a thought experiment. When was the last time you went to see a Marvel movie in the theaters?
Oh, geez. Pre-COVID.
Any other Disney movies? Star Wars? Anything in theaters?
Star Wars, yeah. Whatever Pixar movie was the last one pre-COVID. Yeah.
But you pay your Disney Plus, presumably, right?
Yeah.
And so, but what that's doing is it's collapsing the value down of all that, what used to be a very large booming economic sector, which is the movie theater, and collapsing it down into this subscription model, which decreases the overall economic value of it. And what I'm saying is, I think that is the macro trend we're seeing that's happening in games now, or at least the big consolidating players are trying to do that. And I think I thought about this a lot, and I think it's actually net bad for the art form, because what it's going to do is it's going to consolidate power, and that scares the crap out of me. And that's one of the reasons why I'm so bullish on Web3, is because I'm like, what this does, this is an inverse economic incentive, which encourages people to spend more. And so I'm saying, okay, there's still hope. There's still hope for the games ecosystem, because
go ahead, finish your point.
No, go ahead. I mean, that's
I was going to say, I can make a counter argument though, that, you know, mostly what we're removing is distribution mechanisms that arguably don't add a ton of value. You know, if you can, like the less appealing model that comes to mind is like what, you know, Tesla did by basically removing car dealerships from the model as a distribution mechanism, and just distributing the cars directly from, you know, from the builder to the buyer. And so I think this varies. Like you could say like there's value in like a, you know, independent, like local game store where you can come and like learn about games. You could also say there's value to the movie theater experience, but ultimately these are distribution mechanisms that are taking a cut of the revenue. So
yeah, I mean,
what are your thoughts on that?
Well, I think it's the Tesla model is hard because you're not buying multiple Teslas, right? You're buying one Tesla at one time, and that is just like arbitrage that the dealerships are having. What I'm concerned about is this, like, this makes it difficult for, it seems like what this will do over time is make it difficult for the, you know, $15 indie game to do really well, because they'll have, it seems like this consolidates the value that kind of indie game could get. If you're used to getting Call of Duty for $15 a month, charging you an incremental $15 a month for an 8-hour experience, it's really freaking cool. It now, if you say you get all of Microsoft's resources for $15 a month, all the games, or you can pay $15 one time to get this weird indie game, it's an 8-hour experience. I just think we're sort of taking the slider and moving it towards like, well, we should always just pay Microsoft and like forget about all the little people. And that's just the thing I'm concerned about, which happens in subscription models. And to be clear, this is not black and white. There's going to be a gradient. Like, you're going to still have a bunch of different economic models, but the same way I'm scared about people like AppLovin consolidating power, I look at Microsoft and say, this is, I don't know if long-term, this is actually good for consumers.
So here's a trip that I'm just starting to think about. What does this mean? Say that this became the dominant model, that it's a subscription through the platform. What does that mean for growth marketing? Like, does that mean that your growth marketing team, either your internal team, or if you're working with someone like us at Upptic, like, is it just, hey, we just need people to, you know, make sure that when someone plays in this platform, they're playing our game and spending more time in it? You know, it's like, it it's a system where I don't think we have existing infrastructure to really optimize that kind of adoption.
You do have one thing that we do, which is we have relationships at the platforms, and think about how valuable it is to get featuring. That's the way that becomes a predominant growth marketing lever, which is I don't think that's a good thing though. Like, that's the point I'm making. It's like, it's maybe good for us, but I don't think that's good for the average random indie game.
Yeah, I mean, think about Apple Arcade right now. Like, what's the main driving thing about which games get played the most? It's probably just what are they featuring in Apple's real estate. Like, Apple Arcade games are not like having growth marketing teams try to scale their usage,
right?
For better or for worse. It's very interesting. I mean, this is why I love the space. It's always changing. Like, you got to stay on your toes. Yeah, a lot of implications.
Well, speaking of changing, let's talk about how one of the giants are falling.
That was okay transition.
That was mediocre.
Okay.
That was mediocre.
So this is another update. So we covered a while back. Playtika, owner of the mobile game developer Seriously, which they shut down their main offices a while back, and we covered that. We basically, in mobilegamer.biz, we got kind of what I call a spilled the tea postmortem with kind of leaks coming from various sources talking about what went down. We thought this was an interesting article. So the headline is Playtika closes Best Fiends maker Seriously after clash over studio direction. So a few quotes. In short, Seriously wanted to invest heavily in creating new games, but Playtika's focus was on growing Best Fiends while adding more aggressive monetization to the title. Playtika pressure was to increase KPIs and grow Best Fiends, but they didn't trust or want us to pivot and didn't want us to give adequate budget to explore new games, said one source. Most of the working relationship problems came from fundamentally different ways of looking at a game like Best Fiends. Playtika wanted us to keep adding more aggressive monetization and pressure for players to purchase. This has been noticed by our fans and hasn't been a successful strategy at all. So that's a quote from someone obviously inside Seriously. Sources elsewhere at the studio suggested Seriously's management, including CEO and co-founder Petri Jarvelero, sorry Petri if I'm pronouncing your name wrong, soon came to regret selling to Playtika. They spoke particularly well of CEO and co-founder Petri, who has taken personal responsibility for the studio's demise. At one point over summer, when Petri was out of office, Seriously staff covered the door of his office with post-it notes expressing their gratitude to him, the studio, and their colleagues. So I don't know. Petri is clearly being positioned as the hero of this story. Our sources did not say, this will go back to one more quote, our sources did not say the same about Playtika's leadership, who were described as ruthless and impatient. Yeah, so it seems clear which side of this conflict all of these leaks came from. Yeah. We're just quoting things from the article. We did do some work with the Seriously team in the past, but none of these quotes are from anything outside of the article. But yeah, I don't know. To me, this feels a little bit like reputation management or damage control of some kinds of like, clearly this did not end well for Seriously. And it seems a bit like a bit of a PR push. Oh, there's one more important quote that I didn't say. They did say in this article, new studios will rise from Seriously's ashes in the coming months. So to me, this kind of feels a bit like leadership at Seriously trying to clear the air, saying like, hey, this ended badly, but it wasn't our fault. We were looking out for the players. I don't know. What do you think about it's a different kind of article than we usually cover. It's very kind of gossipy, but right. What do you think about this?
We don't gossip here at all.
Yeah.
The most interesting thing to me that I saw this article was the chart they have for Best Fiends, which maps revenue over downloads over time. And what you see is basically it peaks in January 2015-ish, as in the surge around COVID, at about 2 million downloads. And it basically goes flat to slightly down over that 2015 to now. But over that period, you just see a crazy up and to the right trajectory of the revenue of the game. And that's incredibly impressive and difficult to pull off, where you're having a dwindling player base and a massively accelerating revenue. It's like a 4 or 5x growth in revenue. And then what you see is towards the end of it, sort of like last year, midway, like basically January, March of this year, it starts to dwindle. But still, I mean, it's spitting off just under $7 million a month in cash, which is just like a crazy, crazy number. And I mean, when I look at this, they were purchased for an undisclosed amount in 2019. They clearly grew the business. It was over COVID. That's a really easy time to grow a games business, right? They probably were like the heroes for a while. And then Seriously is looking at it and saying, hey, Playtika is looking at it. Playtika is having a difficult time in the public markets. They're focused on social casino, dwindling segment. they really are trying to, I bet, push their books. And so whether, I bet my guess, and this is just me guessing, is they're saying, hey, if we shut down the studio, run it with a ghost segment, we can just print money out of this thing for the next 10 years while it's still just spinning on cash, and we have basically no capital expenditures. So that's what this reads like to me, just based on what I know, what little I know about Playtika, and when I look about, when I see how much money this game is spinning off. Because the alternative is they say, hey, we're going to just continue to invest in the studio and maybe we'll get another big hit. And if like, no, man, we didn't hire you for you, we hired you for your revenue stream. We're just going to let you guys go and just print money. That's my guess of what's happening here, but I have no inside information.
Yeah, it's hard to know if if anyone from Playtika wants to come on the show and talk about this from their perspective. The door is open.
Yeah.
Shall we go to our next story?
Yeah, this is a little interesting one, a little bit different than what we usually cover. So it's called Overwatch 2. It's a Blizzard.com blog article entitled Overwatch 2 Explained, Battle Pass, Shop, Hero Unlocks, and more. And this is, I pulled a bunch of different sentences from the article and put it into a cohesive narrative, I think. So we'll see. And we're just going to talk about what's going on with Overwatch 2, which released yesterday. So Overwatch 2 releases October 4th and will usher in a new era for the game. Moving to free-to-play for Overwatch 2, together with enabling cross-platform and cross-progression, means anyone can access the game and join their friends for free. Overwatch 2 is shifting to a seasonal model where we plan to deliver new content to the game every 9 weeks. Each season will have a new battle pass, every one with a unique theme and up to 80 plus unlockable tiers of cosmetics. The battle pass is free for everyone, and you can choose to upgrade to a premium battle pass in the shop to unlock premium rewards. Loot boxes are going away in Overwatch 2, and our new in-game shop will allow you to purchase exactly what you want with our new virtual currency. There's a fair amount of other stuff there, but basically, this is Overwatch. This is Blizzard's first real pivot and push into a live services model since I think like they did. League of Legends and WoW. World of Warcraft and World of Warcraft Classic is obviously one, but it's a little different model because it's subscription based. They had Heroes of the Storm, which I think is the closest thing they had to a live services model, and they have Hearthstone, which is also a live service model. But this is another big push in this direction, and like I'm a little bit surprised that they had successful games doing this, and it still took them so long to reorient their whole business towards this live services model, where everyone else has been doing this for call it 4 to 10 years. I mean, think about League of Legends, that's a decade old. Fortnite, they've been printing money for years and years. Call of Duty Warzone, these guys have been doing it for a while. So it's a little bit surprising that it took them as long as they did, but I mean, it seems like they've gotten the lessons and they're really focused on this new business model, which is sort of the free to play, always on, always evolving live services model. One interesting note is I actually do think they may have learned from all the player hate that came through Diablo Immortal, because they're not doing loot boxes. And I think that might just be because, I mean, to be clear, they're going to monetize very well. Battle passes do very well. You can still buy heroes. You can buy these different cosmetics. I mean, it's all set up to go. But what they've done is said, hey, loot boxes we got so much player backlash. And, maybe they would do this anyway, but it's very clear that, Immortal had it, and that was a huge player backlash. So say, let's just steer clear of that, at least for the time being. And we have all these other tricks.
Legal considerations in that as well too, with some of the controversy over loot boxes in past years.
I bet you there is. Yeah, I'm sure there's. If they think they can monetize in other ways, it's like why even bother with it? And if they see down the line that they think they can get away with it, they'll just slip them back in. Right? We'll watch without it, and they're now here's about. So I don't know. I haven't played it yet. I'm excited to give it a try. I'm not a huge shooter guy, but Overwatch has been good. I mean, it's a Blizzard game. I'm sure it's incredibly polished. Warren, do you have any thoughts about Blizzard or Overwatch? I mean,
no, I'm thinking about your comments, Xander. I'm going back to the unveil and initial information when Overwatch first came out, and what I'm thinking about is, initially Overwatch was spec'd as a much more broad scope product than what they shipped. Right. Which was essentially like the PvP product that we know now. It was going to be it was going to be a lot more robust MMO aspects to it as well. So what this reads to me is they weren't sure how the market would react to Overwatch, and they didn't want to bet the farm on it. They shipped a more limited scope product. They wanted to take the temperature of the market and see how it worked for a while. And, once it got enough traction, they said, okay, cool. It's the first new IP forever that is Overwatch, a serious new IP. Yeah. So I think that they got enough confidence in the brand to say, okay, cool, we want to make a long-term strategy out of this. How do we evolve Overwatch into, something that's a longer term, more meaningful revenue stream based on, willing to commit more resources to it, but also how do we optimize the revenue funnel from this and make it just another tentpole IP in our catalog. So that's my main take on why they took this path. But all with the context that I'm not a shooter guy at all. I have played basically every Blizzard game ever except for Overwatch.
Okay.
It looks awesome. I just, I would be shit at it. So I've steered clear. But yeah, I mean, the move makes a lot of sense.
The other thing I think we have to sort of take into consideration is they were, Blizzard for the longest time were the best at shipping boxes of games ever, right? Like from their lineage, StarCraft, Diablo, all these things. They were premium. They were the best premium game developer basically in existence. And that's biased, but that's my opinion. It took them a long time to understand how much the market had shifted. And if you think back even just like 5 or 6 years, like how much the market has shifted, I think in a lot of ways their hand was forced. Like they really, if they shipped Overwatch 2 as a premium bot, $60, like they're not even going to cover their costs. And so I think that's also fits into the calculus. I think everything you said is probably right, but it's also like, listen, like we just can't ship premium boxes anymore. And it sort of just took them a long time to reorient. And Blizzard lost a lot of top talent. And so I think that may have also been part of the reason why it took this, took so long.
Well, this kind of ties back to what we were talking about, a few minutes ago, which is that the default economic model for launching a game in 2022 is very up in the air. There's not like a clear best practices right now.
Well, say if you're trying to make a lot of money, doing anything besides live services in some fashion is not a good way to do it.
This is true.
That much I know. Cool. Well, we got one last little nugget here. Warren, you want to do this one?
Yeah, this is more indicator of what we might expect this earnings season. So this is just from Twitter. This is actually Eric Seufert retweeting someone named Stephanie Link at Hightower Advisors. So this is related to expectations around Apple's upcoming earnings. So Stephanie tweeted, according to Morgan Stanley, App Store net revenue declined 5% year over year in the month of September, the worst decline in the history of the data. China weakness and Japan/US growth slowed. September Q services looked to be -8 versus 11 consensus.
That's a big swing.
Yeah, and then Eric Seufert's comment was ATT, App Tracking Transparency, wreaked havoc on the mobile gaming market, which comprises the vast majority of App Store revenues. The growth of Apple's ad platform, substantial as it has been, was not sufficient to offset that loss within the broader services category. So this is just another version of the news that we've been reporting on one way or another, I think almost every week, which is just the ongoing waves of damage from, Apple, cutting off its own arm in many ways of the ability to effectively market the games on their platform. Obviously, some of this is due to, the kind of hangover of being in the post-COVID era and coming off those highs, but it's clear that this is a owned goal by Apple, continuing to show itself.
Yeah, and it's interesting that they just, even consolidating as much of the value into themselves as they could, it's destructive of value, and so overall they're shrinking the pie. Which, what I'm curious to see is over the next, call it 5 years, how large this trend is. Apple able to build enough internal infrastructure to basically make up that delta, or the game model is going to completely change. I don't know how people aren't giving up their phones, right? So it's not like, it seems impossible that over the longer arc of time, people aren't going to spend more money on their mobile devices, and that this segment won't grow just until we have a step change in the technology that people interface on. But like usage of mobile phones are increasing over time, and it's like in a pretty disgusting way. It's basically like 15 minutes a year of more phone usage, just like linearly upwards. And so like that's like what that's going to translate long term into more revenue, but it's also just like this is such a setback for the people who were in the ecosystem before. So I know it is what it is.
And obviously a big winner here is Google in multiple ways. One is just short term. We've seen in the industry how advertising revenue has shifted more and more to Google as a platform for Play Store. This has not been the trend. Like internally here at Upptic, we've actually, there's, with the lack of competition, lack of buying in iOS, we found like a lot of opportunity if you're a bit creative about your approach. But tangent aside, we know that there's a lot of short-term revenue increases for Google, and they also get this massive benefit. We've expected for a while Google making bigger moves to be more privacy-centric. They get to see where Apple fell on their face, and what aspects of Apple's moves to be more privacy-focused ended up sabotaging revenue, and they can say, okay, well, we won't do that, and we won't do that. And they get to get the short-term benefit and the long-term benefit of learning from these moves.
Yeah, not a lot new here, but just the trend continues. Cool. Well, so no main section, no main interview this week, because obviously it's just the two of us, but we do have a couple apps of the week. Warren, do you want to do your new and original app of the week?
Yeah, so I'm following in your footsteps, Xander. I'm pulling up a Boomer app that we've covered before in depth, but for an important reason. So I'm joking because I'm covering Robinhood again, but for a very important reason. At least in what I've been following, I haven't seen this covered enough, but Robinhood has been making so many amazing product developments over the past few months that I think they are really positioning themselves as not just the dominant trading app or crypto app in some of the moves that we've been covering, but just full on becoming the default bank, I think, for the next generation. And we've covered some of these moves about adding ability to custodial crypto wallets, ability to remove your crypto from what you buy in Robinhood to your own wallet. They've unlocked new kind of professional trading tools that they unveiled this week. None of this is what I want to talk about. I got an email this week, as probably did many people. Well, I guess this was a couple of weeks ago, basically saying hey, congratulations, you now get 3% interest on all cash held in your Robinhood account. And I hadn't heard anything about this beforehand. They ended up starting to do some PR around this. This is crazy. This basically instantly makes them not only a bank, but arguably the best bank as far as user experience. Where else can you just have cash sitting around that's not tied to some speculative stablecoin in crypto that's just getting 3% interest in a volatile market like this? And instantly, my first thought was, how can I move as much of my free cash into Robinhood as possible? And I asked myself, what are the downsides of this? You can still, they have a debit card tied to their account. You can, at any time you can move it into, buying stocks. It increases your margin available for stock trading. You now have this hub for all of your financial experiences for this generation, all of the experiences that are really relevant to them, from everything from the most basic customer to a power user that's trading options and speculating on crypto assets. And I just think that, you look at Robinhood share price, it's not reflective of these massive moves and the ability that they may have to potentially completely dominate the entire banking segment with some, what I don't know is how much the profit and loss of making these moves, but as far as getting adoption and providing the best consumer experience, I think it's becoming second to none.
Yeah, a lot of interesting things here. So the thing I just Googled is Robinhood money, your spending account insured? And the answer is cash in Robinhood spending account is eligible for FDIC insurance up to a total maximum of 250K, which I think is just the banking standard. So they go on to say it's not a bank, but my understanding is that's basically the way that banks work, right? And so in that regard, you say, what's the downside? I mean, I'm not sure there is a huge downside. I mean, one of the things that some banks give you is, relationships around mortgages and the discount rates if you work with them. Robinhood doesn't have that yet. I expect there's not a crazy world where 10 years down the line, 5 years down the line, they're like, hey, by the way, you can use your stock as collateral for a mortgage or another short-term loan or long-term loan. Yeah, I mean, I've been a Robinhood user for 10 years, I think. Listen, I bought my first stock on it college.
You onboarded me.
Did I?
Yeah.
I mean, so I think there's still issues with Robinhood. I just watched the Netflix documentary about the GameStop system, and there's some sketchy shit that happened there. I mean, it was fucked up. But I mean, when I buy crypto now, I do it through Robinhood. When I buy stocks, I do it through Robinhood. I carry a small balance. I have, if I want to do trades on margin, I don't usually, but if I did, they give me a 70 grand line of credit to do margin trades. I'm like, okay. I mean, yeah, it's an incredibly useful service. And there was a point where I was going to pull it all out, and I tried to onboard at Charles Schwab, and the onboarding was so fucked. I was just like, never mind. Jesus, right. I'm literally just trying to give you my entire account.
Well, to your point, Xander, I mean, I also definitely don't agree with all of Robinhood's business practices. But it's kind of like the analogy that comes to mind is Amazon. It's like, I don't agree with a lot of Amazon's policies and practices. Do I use Amazon religiously every day because it's a second to none customer experience? Yeah. And I think it's going to be, and we probably care way more than most people and follow these things way more. To the average person, it's just what's the best experience. And, you know, in a practical way, if I put my dollar somewhere, where am I going to get the best return? And both of those seem to be super clear that the answer at this moment in time is Robinhood.
Yeah, totally agree. Cool. I have another app which we can talk about, and I'll just preview, say there's more on this app coming soon, and I'll leave it at that. So my app this week is Arc 8, and the way that they build themselves is the arcade of the blockchain, or mobile games with crypto rewards. And so what this is it's a very similar sort of setup to what we talked about with Vessel, but it's a little different. What this basically seems like it is it's skills, but using crypto. And I've played a little bit around it. I haven't gone super deep on it.
And Xander, the TLDR on what skills is?
Real money gambling for playing casual games is basically what it is. And so basically what this looks like it basically is app store within an app store, which lets you play casual games, but then it also links into the blockchain and allows you to get rewards. I think the thing, and you know, Vessel seems like it's doing some component of this. Skills was doing that previously without the blockchain. I haven't gone super deep on this one, but it seems like the way they're able to get this through the app store is that none of the actual transactions happens on the app. You basically go link out your wallet somewhere else, and then that's where, you know, most of this happens on the web, but you're actually able to play the games in the app. And so I want to do a deeper dive here. There's, like I said, there's more to come here, but it's a pretty interesting in the theme of Vessel or some of these other mobile first blockchain gaming experiences. Arc 8 was one that was not on my radar and now is, and I'm very curious to dig in here a little bit more. Have you had a chance to play around with this at all, Warren, yet?
I'm playing it right now. I downloaded it ahead of time. It's interesting. You say app store within an app store. You know, the first game I picked is like a Cool Cats, which is like a fairly prominent NFT project. There's like a Cool Cats matching game in it. So it's not actually a separate download or anything. You're just playing it within their platform, which I think maybe gets around. No,
I thought, well, it used the policy was, and I think is, no app stores within an app store. And maybe because they're not, I haven't found a way to spend money in the app yet, and maybe I should do some more due diligence to see if I've just missed it. But if that's the case, maybe that's how they're getting away with it. Yeah, I'm not sure. I got to do some more digging, but it's definitely one that's on my radar now and wasn't on my radar 2 days ago.
Yeah, it's another one of these apps at the nexus of, you know, of monetization, mobile apps, and Web3. So, you know, we'll probably be obsessing about it, digging into it more in the future.
Yeah, cool. All right, well, that's all from us. This is where we go to the plug of our guest. There's no guest here. Warren, do you want to take us out?
Yeah, thanks again for checking in with us on this more casual episode of App Talk with Upptic. As always, give us feedback on the format. We're considering doing more of these more news-focused casual episodes. And again, I'm just going to plug one more time the webinar. You know, it's going to be with real leaders in games growth in Web3. And that's one area Upptic's really focused on. So, you know, as always, the podcast is brought to you by the folks here at Upptic. We do all things to help games grow: Web3 games, mobile games, cross-platform games, creative, user acquisition, analytics. We do it all. We're that bolt-on team and tools that can help you achieve all your growth goals. If you want to talk, we love to talk, and happy to point you in the right direction. If you can't tell that we like to talk. Yeah, anyway, you can reach us at upptic.com. That's upptic.com.
Awesome. Register for the webinar. Talk soon.